afternoon. If you're tuning in, this is Business Defined. And the story we had run earlier, we're talking about proposed amendments to the Banking Act that are going to make the cost of credit higher than it is, actually from the 13.5% to 19.5%, if at all these proposed amendments pass as go through the rigors of the parliamentary process and adopted as they are. Well, that is one of the key issues that we're going to be discussing this afternoon on our segment, interactive segment right here on Business Defined. But other than that, we're going to be looking at the economic outlook for 2019-2020. To take us through this discussion is none other than Gibran Qureshi, who is from Stanbic, who is a regional research analyst, East African sector. But now let's start off with matters of financing. We've seen this move by Gatundu South constituency member of parliament, Moses Kuria, coming out and say that the move to amend the Banking Act and raise the cap by 6% for lending, totaling to 19.5% cost of credit. What is the perceived impact? What impact is it going to have in terms of the economy and also access to credit? Sorry.
I think firstly, of course, it's a welcome development for us in the banking sector. As you said in your introduction, cost of credit will become expensive relative to where it is today, but at least it's going to be available because it hasn't been available despite the regulation, government controlling the rate at 13% where it currently is. So by providing this 6% margin that the MP has proposed, at least it increases the risk appetite of commercial banks to start lending to people that they otherwise never lend to, and those were the SMEs and the retail borrowers that I think needed the credit the most. So for me, I think, again, welcome development. Will it free up capital in the economy? Definitely. This is something that, we argued this morning, that we need to unleash the private sector, and one of the things that we were hoping for, of course, is a total repeal. But if there's going to be an amendment, we'll take that.
Mm-hmm. This amendment has been informed from what the legislator says is informed to empower SMEs access credit. But now let us look at it when it comes to competitive loan pricing. At 19.5 is going to be far from the reach of most SMEs in terms of repayment. And some of the tax experts are of the opinion that the 6% is far too high. What's your take on that?
I still maintain that at least they'll be considered to get credit. Would they rather not have credit, or would they rather at least be considered by banks to get loans? We have to also acknowledge and appreciate that prior to September 2016, when the cap was introduced, on average, banking lending rates were between 17 and 18% on average across the banking sector.
The highest at 25 and 27%.
Yes, the highest. Mm-hmm. But those, they were still making money. So yes, there's a case to be argued that SMEs are, much more credit worthy than we give them credit for. That's a fact, and I think, a lot of banks should think about that differently. But, capping interest rates has been a bad solution to a noble idea. And I think that's the point that I'm trying to make, is that, let's at least start getting them back on the credit cycle. Let them start getting loans, and then, hopefully over time, if other reforms take place, if we get the government to stop borrowing so much locally, if we can empower credit reference bureaus further, and then we can think about how rates can come down. But to me, again, I reiterate, it's a welcome development.
Mm-hmm. Now let us look at your latest report and the economic outlook for 2019-2020. You've put it at 6% growth GDP, just as what the Treasury has at 6.0%. What has attributed to this?
I think, so looking back at 2018, it was a year where we recovered from the drought and the protracted political scenario that we had in 2017. So it was always going to be a base effect that helped us grow. But the weather was better, agriculture did well, and we have no reason to believe that agriculture is going to perform poorly. There's a risk that Brexit could, the process later today, could mean bad news for our flower sector. And of course, our high quality tea buyers such as Iran and Pakistan are also facing a couple of headwinds. So our projection of 6% is largely predicated on agriculture doing okay. But I do acknowledge the downside risks. I think tourism will continue to do well. I've been pretty impressed with the performance of that sector for the last 3 years, I must admit. And the one thing I must say is that manufacturing never did too well in 2018, despite the end of the political cycle. as many expected. So I think, those headwinds will gradually come out of, that sector will emerge out of the woods, and I expect it to do much better in 2019. A lot of people have suggested that it'll be difficult for Kenya to maintain the 6% growth that it probably achieved last year, but I give the economy, credit because of its diversity, and it's a resilient economy. Yes.
Now, implementation of the Big Four agenda. You've talked about agriculture sector. You've also mentioned that though it did not perform as it should have in 2018, we're looking at the manufacturing sector. This is a value addition in the manufacturing sector is one of the things that government has been pushing for. So what perceived impact projected impact should we be looking out for during the year, this financial year, 2019-2020, as far as the implementation of the Big Four plan is concerned?
I think for me, to be very honest, I think the Big Four, it's a noble idea, but the funding of those pillars will be where the government will face obstacles. And they perhaps, in my view, need to embrace a lot of public-private partnerships to really get some of those projects off the ground. As you rightly mentioned, value add in manufacturing is something that is needed to achieve inclusive growth. What I mean by that is, last year everybody on the ground, you saw profit warnings, you saw companies' earnings decline, you saw people on the ground, lament the fact that businesses were not doing well. That's a sign of an economy that doesn't have inclusive growth. For you to achieve inclusive growth, you have to incorporate the two largest sectors that employ people in Kenya, agriculture and manufacturing, for people to actually feel that growth. So in my view, we haven't incorporated anything to do with Big Four in our estimates. But of course, we acknowledge that for sustainable and inclusive growth to be fostered, agriculture and manufacturing, the reforms have to be intensified in those sectors to achieve that.
Debt sustainability and revenue, I mean that debt ratio, has been of a concern. From where you sit, what would be the projected impact? I mean, in our debt, is it something that you need to be worried about? Treasury has said that our debt ratio is nothing to be worried about. From an analyst point of view, what do you think? What's your take?
I think, so I look at debt service ratio, as you mentioned correctly. Debt service ratios as a percentage of revenue has been increasing, which means, so currently if you look at total debt service, both local and external, our ratio is at about 25%, give or take a percentage point up or down, which means for every 10 shillings we collect in tax, we pay 2.5 shillings towards debt. But what we've seen is that out of that debt service, 70% is still domestic debt, and the remainder is external debt. So granted, external debt's rising, but because domestic debt is such a big proportion, we can always roll it over. It's always easier. But I think the more important question for us is, what are authorities doing to ensure that public investment management remains sound? What I mean by that is, when we start taking up external debt for large flagship projects, we have to ensure that the feasibility is done. We have to ensure that the contracts are thoroughly addressed, and we have to ensure that there's going to be a multiplier impact from those projects. I think that's the main thing, because the argument from the government is one completely different from the analyst community. The government is saying, we're going to spend debt, we're going to take up debt to build infrastructure, which will eventually be mutually beneficial for this country. But at the end of the day, we have to take a step back and realize that if that debt that we've taken up in the last 5 years is not generating dollar receipts, then unfortunately, the hardworking taxpayers are going to pay for it, because the government would have to increase taxes to service that debt. You've
talked about taxes, revenue collection. The taxman has been missing the mark, and here, as we look at, we've been seeing an upward trend in our budget, and we don't expect it different in 2019-2020. So revenue collection and supporting government's agenda, or rather development agenda, how do you strike a balance? How do you think the taxman is going to try and play out during this fiscal year?
It's very difficult, because if you look at the consolidation that's happening in the deficit, there's a lot of pressure from the foreign investor community for Kenya to reduce its fiscal deficit, and they've promised to do that to about 6%. A lot of that consolidation is happening through an increase in revenue rather than a substantial cut in development. And if you look at a lot of the numbers from the initial budget to the revised numbers that we've had over the past couple of days, very unrealistic targets. And the issue that I see is that if you don't start thinking about more vibrant reforms such as, widening the tax bracket, looking of, good strategies to formalize the informal sector, then, you can't really tax your way out completely of debt, because ultimately, as you rightly mentioned, you will stifle productivity, especially if the other supply side reforms in the country are not taking place.
Widening the tax bracket, and there have been calls to rope in the informal sector. How do we go about it? You see, informal sector is a place that we do not have basic data about who exactly falls into this category, but the government has really been out there saying that we need to rope in and widen the tax bracket in regard to revenue collection. How do we go about it when you say informalize, or rather formalize the informal sector?
So very difficult. I agree with you 100%. First of all, who is the informal sector? The informal sector has, an incentive to, shy away from authorities because of the perceived view that, as you formalize, you're going to pay more taxes. But, on the flip side, as you formalize, you get access to credit because you're a formal sector company. You get access to, government programs that will boost your profitability as a company and increase productivity. It's something that sub-Saharan Africa faces. It's not unique to Kenya. Every country that I look at, I cover, is trying to think of strategies how to, revitalize this, collection of taxes. Other countries in East Africa are way behind us because they're, still registering businesses. At least Kenya is ahead of that in that respect. So, I mean, it's going to be a journey. It's not going to happen overnight, but it is important. So as to ensure that, we have a sustainable model. You can't continue increasing taxes because, your infrastructure projects that you spent on haven't generated the dollar receipts that you expected. So I don't think taxes should be the scapegoat, but I think we should be more leaner, more efficient, and more prudent with, other sides of public finance management, in my view.
In about 30 seconds, what should we expect from Kenya's economy during this fiscal year as we come to a close? So
we've got a refinancing requirement. We have to refinance about $1.6 billion in external debt in the first half of this year, which means that Kenya will be looking to at least, issue more debt to refinance that. I think we will be waiting to see a continued recovery in key sectors within the economy. We're expecting a fairly stable exchange rate. And of course, as a banking sector, we hope we can become banks again and not glorified, fund managers by investing in government debt. We want to start lending credit, financial intermediation, that's our job. So we hope that, we hope it's a repeal, but we'll take the 6% in the second half of the year if it comes.
I'll reserve my comment because I'm going to be biased on that, because I tend to think banks, 25%, 90%, that's far from the reach of most Kenyans.
19%, yeah.
19.5%. It's still far from the reach of most Kenyans, but hey, that's my opinion. Well, if you're tuned in, we are looking at expected projections in as far as the economy is concerned, and our guest this afternoon has been Gibran Qureshi, Stanbic Bank Regional Economist East and Africa, and said, well, it does look bright, driven by agriculture and also recovery in the tourism sectors, and we expect that indeed the implementation of the Big Four plan is going to play a key role going forward in as far as the economy is concerned. I'm Regina Manyara Gitao. Do have a pleasant afternoon ahead.